So welcome to today's video. In today's video, we're going to be talking about the Manulife One product. This is your all-in-one mortgage and banking solution. So the reason for the video, I really think this is a product that just a lot of people don't know about, or they find it's very confusing. And it's not that confusing, so hopefully this video helps you today. I was at a networking group meeting in Burlington this morning with some other business owners, and I asked the question about this product and see who knew anything about it. And we did, of course, we had a financial advisor in there that's using this product and love it. But then a lot of people didn't know how the product worked or even much about it. And this product's been around for years, and it is a unique product. So it's really an innovative solution that it provides a lot more flexibility for folks. So what it's doing is it's combining your mortgage, your line of credit, your home equity line of credit, your checking account, your savings account, all your bank accounts basically into one. And it's meant for people that have a minimum of 20% down or at least 20% in equity. So the bottom line is it does help with reducing your overall interest costs. It helps with paying down your mortgage faster and your debts faster, and simplifying your banking. And who could use this product? This is really meant for, if you're a business owner, this is a great product for you. If you're a real estate investor and you've got portfolio of properties, this is a great product for you. If you're a type of person that has a little bit more money left over at the end of every single month and has a goal of paying down their debts faster, then this is a product for you. But if you're a big spender and you blow your money every single week and you can't control yourself, this is probably not the right product for you. Anyways, let's jump into what this product is all about. So today we're gonna talk about a few things. We're gonna talk about, number one, how the product works, and how you can be debt-free sooner using it, how it compares to traditional mortgage products, how it can help you, pay for things when life gets in the way and you have unexpected expenses, how you can customize this mortgage product specifically, and we'll talk about how it works for real estate investors, but really good for investors too, and general investors that borrow money for investments. And also, if you're thinking about retirement planning, this is a really good product for that as well. So those are the things you're going to cover. You can find all of this information on their website at manulife.ca. But let's just jump right in. So when we talk about how a traditional mortgage typically works, is you're going to borrow a large sum of money and you're going to make payments. So that's principal and interest payments. These could be fixed, could be variable, and you're going to pay a significant amount of interest over the amortization of that mortgage. So whether that's 25 years or 30 years, and typically you're going to pay a lot more interest at the front end of your cycle, right? So most of us have the goal, we want to be mortgage free eventually, but that can seem a long way away, especially for first-time home buyers. And many people want to pay off their mortgage quicker, but hesitate to because they need accessible cash for emergencies. So what ends up happening is there's a little bit of money left over in low interest savings accounts, or even more money sitting in checking accounts earning no interest. And if this scenario sounds familiar to you, then you're not alone. Most of us are in this situation. So what I want you to do is just imagine, because you really got to change the way you think about banking and mortgages when you're thinking about this product. So I want you to imagine a banking approach where all of your money works towards reducing your mortgage, yet still remains easily accessible. So what if you could, significantly save on interest and get debt-free faster? That's where Manulife really comes in. So Manulife One offers, like I said, an all-in-one banking solution, merging your mortgage, your savings, your checking, your home equity line of credit, and your income deposits all into one account. And the simplicity not only makes managing your finances easier, but it also helps with you retain more of your hard-earned money. So with Manulife One, you could potentially achieve greater financial flexibility and, importantly, more efficiency on how you're managing your money. So we'll talk about the accounts. I'm not going to go too deep into this, but I just want to make sure you make sure you understand it's pretty straightforward. Manulife One, you're going to have one main account, and that's going to blend the features of a line of credit and your bank account. And this allows you to easily tap into your home equity and re-borrow what you pay down. Okay, so it's a re-advanceable home equity line of credit that's attached to this. Okay, so for instance, if you reduce your account balance by paying $10,000 from, say, savings, you can immediately re-borrow that amount if you need it later. And this is a lot different from a traditional mortgage where extra payments aren't easily accessible again. And moreover, this account works best when used for all your daily banking needs. So your income is directly deposited into it. It helps to reduce your debt immediately. And then so any money left over in your account at the end of each day is going to help to reduce your debt over time, potentially making you debt free sooner and saving you a lot in interest. And so let's break down how this gets sectioned out. So Manulife One mortgage allows you to borrow up to 80% of your home's appraised value. You have two parts. So you have a main account, which acts as both your bank account and your line of credit for everyday banking. And then you have term sub accounts. So you can have multiple accounts here, and we'll talk more about this later on when we're talking about the sub accounts. But they're very similar to a traditional mortgage. So let's say you have a $600,000 mortgage, but interest rates go down to really low, and you'd feel more comfortable if you had a bigger portion of that mortgage locked in. So you can do that, and you can lock into, say, a 5-year term. If the interest rates get down to like 3%, you can lock into 3% that portion of the mortgage, and the rest is in that main account, right? And so you can borrow up to 65% of your home's value can be borrowed through the main account. And if you borrow more than 65%, the excess is placed into a term sub account. You can easily access all of this information in your online banking or mobile app. Okay, let's talk about the fees. Manulife One combines a mortgage, line of credit, we talked about that, and a full featured bank account. So the monthly fee on that $16.95. If you're 60 years or older, you're paying $9.95. And this is going to cover unlimited daily banking transactions. This includes 24/7 online and mobile banking, interactive transfers, direct deposits, bill payments, fund transfers to other Canadian institutions, debit card purchases in Canada, ATM transactions. You also get the benefit of being able to write checks on this account as well. Okay. So if we recap this, the Manulife One, you can borrow up to 80% of your home's value, appraised value. Up to 65% of this amount can be in your main account. Minimum of 15% will be in a term sub account. The main account is a unique combination of a line of credit and a bank account. Interest is calculated daily on the main account, so reducing your debt daily means a lot less interest that you're going to pay over time. And so it's a really good product that integrates overall with a good financial plan, right? So really good product that way. So how I want to talk about how it's a little bit different from traditional mortgage when you think about paying your mortgage down faster or getting access to some of the funds. So think about this for a second, right? So we've been going through a lot over the last couple of years with high interest rates. People are struggling with mortgage payments. People have lost jobs. We're going to go through all of that in this section here. So with a traditional mortgage, your payment is made up of two parts, right? You have principal, you have interest. With your Manulife One main account, your payment is only the interest portion. So your interest is calculated each day based on your day end balance. And at the end of the month, your interest payment is withdrawn from the main account. But what about the principal payments, right? So with your main account, every deposit you make is a principal payment. So if you deposit $100 into your main account, your principal is automatically reduced by $100, which also reduces your interest. So when you deposit more than you withdraw from your account during the month, your principal will go down. And if you have a month where you withdraw more than you deposit, your principal will go up. And that's where I was saying earlier, if you're not a saver and you spend, then this is where you can get into a lot of trouble, okay? So that's basically how that works. Now, what happens if money is tight? You know, you lose your job, reduction in work hours, transmission on your car goes, you know, roof needs to be replaced. These are all really good examples of expensive setbacks. And if you have an unexpected expense and money is tight, you can temporarily reduce or even stop deposits going into your main account as long as you have borrowing room available. Your interest payment will still need to be paid, okay? But that's going to be withdrawn from your main account at the end of every month. And this can be paid from your home equity line of credit portion. So this is called capitalization. You're basically borrowing from your home equity to pay the interest payment, which means that could give you a couple months if you lost your job to help you get back on your feet. And that's a lot different, folks, than a traditional mortgage. Imagine missing a few payments on a traditional mortgage. They'd be calling, right? So that's one thing that's different. Now, what about what also is majorly different? What if you come into some cash? So if you get a gift, maybe you get a bonus, you get an inheritance. So when you deposit that extra money into your main account, it automatically reduces your debt and saves you on interest. It's like making a prepayment on your mortgage, but you don't have to call in or worry about prepayment penalties and that sort of thing. So feel free to pay back the debt in your main account at any time with no penalty. Very cool. And that's why it's a lot different than a traditional mortgage. So to summarize, the Manulife One main account differs from traditional mortgages. It doesn't require standard mortgage payments. Interest is calculated daily with the total interest automatically withdrawn monthly from your account. There's no mandatory principal payment needed as long as there's borrowing room available. And there's a lot of flexibility. It allows you to adjust your debt repayment rate and deposits and that sort of thing. So pay down the principal without any penalty. So really cool product that way. Now let's talk about the customization. We'll talk a little bit more about how the sub accounts work and how you can manage money your way. So a sub account is created when you section, like I said, when you section off a portion of your debt from your main account. So this new account or sub account is created within your Manulife One account. And there's two different types of sub accounts available. You have term and tracking accounts. So I think it's term, I think you can do up to 5, and then tracking you can do up to 15. And we'll talk a little bit about how this works. So without getting into too much detail, we talked about how you can lock in a portion of this sub account, right? We talked about that a little bit earlier on. And they're going to be for fixed terms that you're going to pay those off. But let's talk about using the tracking sub account. So imagine you've got a bunch of real estate portfolios. You can set up separate sub accounts and tracking accounts for each one of your properties. So what does that mean? So all of the expenses, right, that you're using to pay for that property, all of the income that's coming in from that property can go into these accounts, and that just really streamlines everything. And let me use it on this slide here, like the 3 big benefits that happen, right? So when you're investing in real estate, this can be attractive. It's an effective way to build wealth. We all know that, right? But really, the ability to track the expenses is going to save you on a lot of time and headaches. So because the Manulife One combines your mortgage with your checking account, all of your rental expenses and income can be managed from that single account. This means makes it a lot easier to track interest, maintenance costs, and all of that for taxation purposes. Also, you can use it to manage your investment. You can use the equity that you're building from your investment properties and borrow from this account to pay for those big purchases like finance repairs, or even to purchase additional properties. And it also can help you to accelerate the debt repayment. So by having rental income flowing directly into your Manulife One account, you could potentially pay down your debts a lot faster and then open up more equity that you can use to buy more properties, right? So now let's flip over to folks that are thinking about retirement. So even if you're confident that you're financially prepared for retirement, it never hurts to have a bit of a backup plan. And if you're like most Canadians, your home is your largest asset, and you want to be able to access the equity in that, right? So let's talk a little bit about how the Manulife One compares to like a reverse mortgage. So first of all, we'll talk about the Manulife One. So opening up a Manulife One account doesn't automatically mean you have debt, right? It offers you the ability to withdraw from that line of credit, but when you want to, okay? Interest charges, so you're only charged interest on the money you borrow, and there is no minimum withdrawal requirement. And you can withdraw those funds anytime you want, as we talked about. And then the other big, huge difference is there's a lot of repayment flexibility. You can pay off your borrowed amount at any time with no penalty. And then if you think about deposits and interest payments, no deposits are required until you reach your borrowing limit. So what that basically means is similar to a reverse mortgage, you don't actually have to make any payments, right? You're going to capitalize. You're going to basically use the home equity line of credit to pay that minimum interest payment that you have to make until you reach your max, which could be a long time from now, right? So with a reverse mortgage, it is a great product for people that need it, but it does have a little bit of less flexibility than Manulife One. So typically with a reverse mortgage, there is a withdrawal limit upfront, like a minimum of 25,000, and then when you want to pay it off, there is a penalty. So if you borrow the money on a reverse mortgage, within year one, typically it's about 5% that you have to pay back. Year two, 4%, year three, 3%, and then after year three, typically 3 months interest, right? Whereas with the Manulife One, pay it off at any time. The other thing I want to talk about with the Manulife One is something called Right of Survivorship. You may have had this, and I've had lots of conversations with families where, like, what happens if one of the spouse dies and they have a mortgage? Okay, so let me talk about how this works. So if one of the mortgage holders passes away, the mortgage and the title automatically is transferred to the surviving holder without the need to requalify. Whereas with other banks, the surviving individual might have to requalify for the mortgage. This can be challenging, right? Especially if they're retired and they have reduced income and they're on fixed income. And this could possibly lead to the cancellation of the home equity line of credit or even the need to sell the home. So bottom line here is it provides another option. So I'm not saying Manulife One is better than a reverse mortgage. I'm saying it provides different features than a reverse mortgage and has different options. So there is a little bit more flexibility and control compared to a reverse mortgage, and it's a bit if you're thinking about paying it down, needing the money for a short period of time, paying it down. That's where this scenario works really well. Okay. The other thing you want to think about is we've seen this on the news over the last year is mortgage fraud, where people have actually sold houses that don't belong to them. I can't believe that's happening. But if there's a charge on the mortgage, so the Manulife One will help with that by putting a charge on the mortgage, so a collateral charge on there against their home, and that would potentially help with mortgage fraud and prevent it. So one of the things that it'll do.